We had an interesting discussion today with some folks who are interested in potentially buying a home, but they noticed what seems to be an increase in property decreases. Is that what you're seeing in the market right now? We are going to run through the single family and multifamily data, plus median home price madness, and we're going to cover the increase in property price decreases here in the Southern California Housing Market Report. And let's do it. We're diving into the data. We're going to be covering July's from 2024 all the way back to 2018. Why are we looking at such a wide spread? Well, 2018, 2019, normal years. 2020, we had multiple offers in a crazy market. 2021, crazy market. 2022 through 2024. Well, we're going to show you. Not quite as crazy. So, diving in, looking at Orange County single-family sales for the month of July. Looking at 2024, we can see that certain things have increased. The red line, new listings. So we're up year over year. Nowhere near where it was in more normal times, but up year over year. And what do we also see? Well, we see pending sales, the number of properties going under contract. That is up year over year, just slightly. The gap between new listings and pending sales is still pretty tight. We're not seeing a big increase there, which would, if we did, it would mean inventory is starting to stick. And we're going to be looking at some other exciting stuff later on to see how the market is looking, including median home price. LA County data for single family homes, same trend as we saw in Orange County. We are up year over year for new listings and up year over year for pending sales. Pending sales are only up slightly more than where they were in 2022. Market's still moving. So the way I like to describe pending sales, that's buyer demand. New listings, seller supply. It continues to be below normal levels, and we are not at normal levels of inventory despite the increase that we're seeing. Riverside, look at that big drop we had into 2023 for new listings, up year over year, just like pending sales. What it's looking like, the trend seems to be that pending sales are very similar to where they were in 2022, but new listings are below where they were in 2022. So it's actually more of a seller's market than it was in 2022. Interest rates had gone through the roof at this time, and we had just come off of record lows, so pending sales were slowing. Then, look at that big dip we had in 2020 for July, and that's a twist there where there were more properties going under contract than we had new listings. That was an extremely hot market in 2020. Like I said, July, there were multiple offers out there. And here in 2024, up year over year for listings, and we can see pending sales just like 2022. Interesting to see that trend. And then Ventura always marching to its own drummer, fewest number of sales because of fewest number of houses. And it's actually following a similar trend with new listings, but look at pending sales. So this is one where pending sales in 2024 aren't matching 2022. We're down, and we've continued to see that in Ventura. Numbers are down for pending sales. People don't want to buy there, even though it's beautiful. San Diego, big increase year over year in new listings. Pending sales like 2022. Very funny to see how consistent it is. And same thing I said, inventory nowhere near where it was in more normal years for the number of new listings. Moving into the multifamily data, everything 2 units and larger that we find on the MLS, and we see that inventory is up. Pending sales are up year over year, again, like 2022 for OC multifamily, nowhere near where it was in 2021. The interesting thing with mortgage interest rates as high as they are, it's tougher for these properties to pencil. There's less cash flow because a lot of it has to go to debt service. And don't forget that any properties 5 units or larger are going to be adjustable rate financing. Commercial financing is adjustable rate. The 1 to 4 for rental properties can be fixed rate. And here we see for Los Angeles that the number of new listings is closer to more normal levels of new listings. Pending sales down slightly, somewhat similar to 2022, up year over year. These numbers aren't reflecting the recent drop we had in mortgage interest rates, thanks to the panic we had on the stock market in that one Monday. So just bear in mind that we won't see the effect of mortgage interest rate dropping until we get into the August numbers, which we'll be doing in a few weeks. Riverside multifamily tends to be a higher cap rate environment, just like San Bernardino. Listings up slightly, and we can see here that pending sales kind of uneventful. Again, you can see the effects of mortgage interest rates. San Bernardino inventory is up. We've seen an increase in San Bernardino this year in the number of new listings. Pending sales up, but not quite as solid. So there is a chance we're going to start to see San Bernardino multifamily inventory building. Ventura, not that many buildings. Look at that big surge in 2019 of 25 listings. That's a big number, especially when you compare it to where we are for this July, just 6. Last July, 2023, nothing went under contract. So now with 4, that's a more solid multifamily market. And again, not reflecting the drop in interest rates. Got a spike in inventory in San Diego. People selling, getting out of there potentially, and doing a 1031 exchange to somewhere else. And we can see that number of new listings is up as well. So there was a big spike in inventory and properties going under contract in 2021. And we see a big spike in inventory, kind of a small spike in pending sales. So another market where potentially we could start to see things build. But with the drop in interest rates, things will start to cash flow again. Maybe we'll see an increase in number of properties going under contract. Diving in for some median home price madness. And here we go, Orange County. We can see that we are down month over month for the median home price. Last month we were at 122.1, and now we're at 1.2. And we can also see LA is down, dropped 5,000 month over month. Riverside went up a little bit, about $7,000. Is that scary? No. Short answer is this is typically what happens this time of year. Last year we saw a drop after August. We did peak and turn a little bit sooner this year, but these are still record high crazy numbers. For Orange County, we're still above that peak that everybody was talking about back in April of 2022 when interest rates started to spike and everybody jumped into the market and it got nuts. Well, we're still above that for Orange County, and we're still right at it for LA, and we are above it for Riverside. And the year over year changes in median home price, Orange County is still an 11.6% change, which is way too high. It needs to be closer to a 3 to 4% change year over year. LA is 6.4%, Riverside 7.6% year over year in the change in median home price. Where do we expect things to go from here? Well, I would have said we'd see a drop in median home price through the rest of the year. That is typical. No shocker there. Don't need to pack up the house and kids and move to the mountains. Like, that's what happens. But if we see mortgage interest rates drop, we may see more folks jump into the market. We may actually see the median home price turn the other way. So stay tuned. It'll be interesting. And the 3 other counties, what the heck is going on with the median home price? Well, San Diego had a pretty big drop month over month. Ventura, slight drop, and San Bernardino, teeny tiny drop. Again, drops aren't crazy this time of year, and we will continue to watch and see the effect of the change in mortgage interest rates. San Bernardino, about a 5% year over year change in median home price. Ventura, about 5%. San Diego, 6.5%. These are closer to more realistic numbers, although don't forget that inflation's up slightly, so we do want to exceed inflation at least, or theoretically we would exceed inflation. So we'll keep tracking these numbers to see if the mortgage interest rate changes is going to change anything in the median home price for next month. If you know me, you know I love the Altos Research Reports. We had Mike Simonson, the founder of this company, on. We've done some live streams together. We're going to dive into the county data, and I want to show you an interesting trend in properties with a price decrease. Had an interesting discussion on that. But first, we're going to go ahead and take a look at this zip code. As you may have seen in some of my other content, we are actually redoing our house. We're doing a substantial remodel, and we're going to put it on the market. It's going to be out in a few weeks. So I can use Altos Research data to help me figure out what's going on in my market, and you can sign up for your zip code or city too. So Newport Coast is a crazy market. You can see that the market action index, it's actually a slight buyer's advantage. So it's a buyer's market where I live. But let's look closer at the data. Do I need to be worried? Well, the inventory levels are up, and that is not a record high, and it's nowhere near where it is in more crazy years. But look more granular. Look at the market segments. In my zip code, because of some of the communities that are here, there's just crazy prices. So I don't have a $45 million house, but it is in the lower quartile where we are. So we can see that at this point in time, there's actually no new inventory and 3 were absorbed. It's only 66 days on market if your home is down in this quartile. And that's where we're going to be priced. So it will be interesting to see what ends up happening when we bring our home to the market. But based on this data, we can see that there is a need for properties in that lower end. there isn't much of a need for properties in the higher end. In fact, this third quartile, it's 161 days on market. So if you've got a $27 million home to sell, still feel free to reach out. We'll properly position it and get it sold faster than 161 days. Yes, it's true. Things have changed if you're looking to buy or sell a real estate right now, thanks to the NAR settlement. Make sure you reach out to us. We are your primary resource, whether you're looking to buy or sell. All right, diving into the county data, had an interesting discussion today. And what I was talking to a home buyer is that they're seeing more properties with the price decrease, and they admitted that it could be anecdotal. And what I've seen the same thing, and we're seeing it where sellers are adapting to the market. We had an increase in inventory, and they tend to adapt to the market faster than they ever have, because when you know that you were getting multiple offers in a week on market, if you don't have multiple offers, you got to be realistic, probably need to adjust your price. But you don't need 50 offers. You just be realistic. That's why you got to work with a good agent to help you figure out what to do. But you could see we have an increase in the number of properties with price decreases. So these are properties dropping their prices more than last year. But the interesting thing to look at is when we look down here in inventory, and that's why I want you to subscribe to these darn things, you can see that when you compare new versus absorbed, so new inventory coming versus absorbed, that there's fewer properties coming new than have been absorbed. And we look at the bottom quartile in Orange County, that's 14 days, 2 weeks on market if you're around that $1 million price point. So things are moving very quickly, and in every case we see more inventory being absorbed than new inventory come to the market. I haven't been able to say that same thing. So this is an interesting trend to see this time of year. Sales are still moving. Moving into LA, and one of the things I should make clear is this is more recent data. This is as of today, middle of August, when we're shooting this video. So this is actually factoring in some of the interest rate changes we've seen, unlike the last data we showed you. So price decreases. So we're seeing, if you look very, very carefully, you can see that there is a drop in the properties decreasing prices. And we'll have to see if that trend continues as mortgage interest rates drop and stay lower. But again, we're up slightly year over year and pretty close to where we would be in a more normal market for price reductions. Don't forget that. Before we had some of these crazy ups and downs, it's important to look at what a normal market does. And new versus absorbed inventory, a similar trend. In fact, the bottom half of the market, those are some pretty big absorption numbers. So we could start to see where days on market actually drops if this trend continues. So we got to keep tracking this. Riverside, and again, you can see that turn in the number of properties dropping prices, and that could be a reflection of the mortgage interest rates. Bottom half of the market, actually all three bottom quartiles, a lot of absorbed inventory. I'm predicting we're going to see a slight drop in days on market. Market may actually be heating up. San Bernardino, we can see that they haven't turned and started to go the other way on price reduction. So we're higher in the level of price reductions, pretty darn close to where we would be in a normal year for price reductions. What's this peak up here? Well, that's when interest rates went through the roof the first time and scared everybody. Down here, absorbed, solid numbers of absorbed properties. Interesting to note, and we see this occasionally, where the bottom quartile in certain areas takes longer to move, and this is the case here. Middle two quartiles, 49 days, bottom 63. So the bottom quartile is moving slower than any of the other three quartiles. Ventura and price decreases, same trend. Very similar to more normal years, the number of properties decrease in prices in Ventura. It's hard to tell, but it looks like it's potentially still increasing there. We're seeing absorbed properties exceeding, other than the bottom quartile, those are the same. 21 days on market though for that bottom quartile. That is very fast for home sales. San Diego, and here's what I was talking about. You see that drop. So the drop in the properties with price reductions, with price decreases, that means that they don't need to. So they're getting offers and don't have to drop their prices, or it's a bunch of very stubborn sellers. But I think it's a case where we're seeing more properties being absorbed. And that's where you look down here at inventory. Look at the bottom three quartiles. We're seeing big numbers of properties absorbed, and they're at 28 days on market, which is pretty quick. we could see this drop. If you're digging this data, make sure you subscribe to our free weekly email newsletter, and we'll gently deliver these updates to you every Sunday. Next thing you need to know is in this video right here. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we can't wait to hear from you.